prop firm trader with $6.7 million in funding.
I'm just a trader. I don't like to have a label on myself. I don't like all those terms, smart money, ICT. Does it really matter? Because you see all the ICT guys, it's like less than 1% are profitable, but they have all these insane markings. It's just a waste of time and energy.
Andrew not only talks the talk, he can actually walk the walk. And in this episode, we take a deep dive into everything technical related to trading and exactly how to be a funded trader and a profitable funded trader.
Everyone, when they see prop firms for the first time, they're like, oh, I'm going to get a 100K account and I'm going to make 10% a month and that's 8,000 in my pocket, right? But after a few months or maybe a few failed challenges, you realize that's not really obtainable, right? Because you actually need to make 80% of your account. Like you need to understand, you need to see yourself in maybe 5 years. And not just in terms of money or success, what's your habits looking like? What's your thought process like? How you're feeling about certain things? What's important to you? And once you figure out that person in the future, then you just start to replicate that into the present.
I believe it's important for us to really have clarity in a strategy. Would you be able to summarize your strategy in a few sentences of how you look at the market?
So I focus a lot on.
Hello, ladies and gents. Welcome back to another episode. We're joined by the #1 banned prop firm trader, if I'm not wrong in saying. Andrew, you may have seen him online. You're building a brand, and I'm glad that you are, because I think good traders should make a brand too, and make some noise and have some attention, and you definitely have some value to share. I've watched basically all of your videos, which is good to see, the good content you're doing. But first of all, I wanted to open with that. You're probably the #1 banned trader. How many firms have kicked you off their platform?
At this point, I think it's like 7 or 8 or 9 prop firms that have basically not allowed me to trade in them. Banning is a very powerful word, and I use that as a kind of a tool to market myself, like the banned trader. Sounds nice. But then prop firms have started using that against me. So they're like, oh, all these prop firms are banning you because you're a risky trader, right? Yes. So we're going to ban you too.
So it gives you that reputation of risky.
Yeah. Which I don't want that, because banned is a powerful word. I'm not banned for doing any illegal trading or arbitrage or whatever. It's just they're not allowing me to trade on
So
the
let's
platform.
clarify. I know a little bit of the inner workings, but for those that don't know, they ban you, which is a powerful word, but they're basically, from what I understand, they don't like you because you make too much money. Let's be real. And we know the business model of prop firms. They make money on not profitable traders. They don't want too many profitable traders. Otherwise, it's a liability for them. So talk to me about how they say it to you. Like, we don't want you anymore. How do they word it to you?
So it's funny because banning me for being profitable, that just happened with like 3 or 4 prop firms, where I had a couple of payouts and then they just banned me, saying the usual, risk email. When I see, risk department, I just know. So they basically say, my risk is a bit too high. They cannot replicate my trades into the live market, which obviously is bullshit, because they don't do it. Yeah, they don't do it.
To your knowledge, does any firm A-book? Popular firm?
I just know one, which is Funded Engineer.
Okay,
which
the
I've
rest
known.
are just B-book.
Yeah, the rest are B-book. So that's the thing usually. And most of them are just, maybe I start with a prop firm, I fail 2-3 challenges, and then I get funded, and then they don't allow me to get to the funded stage because maybe I blew 2 or 3 accounts. So they just refund me the last accounts that I passed, and they keep the fees for the ones that I failed, which is obviously a scam, right?
Yeah, because they take your money when it suits them, but
exactly.
So when you're in that process of going for funded challenges, I want to talk about your process, because it can seem quite aggressive, but there's one thing being a gambler and a degenerate and no plan versus calculated risk, which is, I believe you're in that category of you do risk more than needed for the challenge phase. And you basically say, I don't need to waste my time trading this for a month when I can just pass it in 1 or 2 trades. So you go for that speed into going for the challenges, and that's how you've acquired $6.7 million in management from how many firms? 10 plus?
Yeah, it's more like 18, 17.
18 firms. So you've played the game well, the prop firm game that it exists. It can be a game you can consider an art and a skill set to master the opportunity. And you've probably done the best out of everyone. So talk to me about your process from 0 funding to now 6.7. I know you had a period where you lost a few million and then recovering that too. So what is your process with going through evaluations?
So when I started, I was funded with like 600K. It was my Forex funds, which obviously they shut down. I was in their VIP program and everything like that. And yeah, I secured a couple of payouts, but then I realized if I start to try to make more profits, it's just gonna blow against me. Like go for 5-6%, it's not gonna work well in the long run. So that's when I wanted to focus on growing my capital instead. So basically, I used my payouts, my profits, reinvest into challenges. I didn't really care. Maybe I took like 70-80% of the payouts, just reinvest it into the challenges to pass as many as possible, and then just use the fund accounts to make 1-2% a month.
So what was your initial investment into the challenges? Because you've gone from your initial inputs and then profits, withdraw the profits, pay for more challenges, and scale from the house's money. So what was your initial amount in that's your money?
The initial investment into challenges, that was just, I think my Forex funds was like 1.25K, the 300K account. So I don't know, let's say with some accounts being lost, I don't know, 5,000 maybe, but then you get it back.
Okay,
But
yeah,
initially
true.
when I started with prop firms, I started with, I don't know if you remember Funding Talent.
The
Have
one
you
that
heard
was
about
like everything was perfect conditions. Yeah.
And then they blew up. So that
imploded.
was the first prop firm that I used,
Okay.
which was a big one. I had a biggest payout was like 50K I got with them.
And they honored the payouts?
Yeah, that one
Okay.
they honored. After that, I had like 30K. They didn't honor
Okay,
it.
okay.
So that was how I started with prop firms, coming from a personal account, and then was my Forex fund. So I basically just used those profits
Okay.
to go into my Forex funds. And
That's
then,
crazy then, because if you look at your risk to reward in terms of what's gone from your pocket to what you've received in your pockets, which at this point, I don't know if you've publicly said, in terms of total payouts
I think
to date.
it's
So out of the dozens and dozens of prop firms that exist in the whole space, who can we really trust? Whether they use slippage, whether they use types of drawdown, unrealistic trading conditions, every single prop firm has hidden tricks. So after thorough research and speaking to a lot of traders, Alpha Capital is definitely the best prop firm in the space. So apart from their no commissions, low spread, no slippage, great reputation, never denying a payout, because you are a Titans of Tomorrow viewer, you get a special discount on every evaluation just using the link or using the code TOT for Titans of Tomorrow. Additionally to all of that, I'm also going to give you a community. So for everyone that uses the link below, you'll get a free trading care package, and you'll also get access to me on a Zoom call once a month, asking me questions, going through charts, real trading Q&A. And I don't need any money from you. I don't want anything from you. I just want to make sure you succeed with the best prop firm and some good education.
with the biggest prop firms that I trade with, where I have like 6 figures in payouts, is like 1 to 10, usually the risk reward. So
Okay.
maybe I spent like 10K overall over a year and made more than 100K.
On average per firm.
Yeah.
What about in general from like your initial, let's say 5K in, the rest is the house's money, withdrawals paid for
Yeah.
the next evaluations, but your 5K in versus your lifetime payouts, what would that look like?
I don't know. I think it's a crazy number.
Yeah, I mean, to say how powerful it can be
Yeah.
utilizing prop firms correctly.
Yeah,
a lot of people
exactly.
don't do it in the way that you have done. So I think in this episode, we explore your strategy with firms and then in general, technical basis on how you do things. But yeah, just out of curiosity, what is your lifetime payouts with every prop firm?
I think in the last, so when I started the prop firms like very aggressively in May last year, so less
Not
than a
even a
year,
year.
and I think I did 1 million payouts.
Bro, that's insane.
sure.
Oh,
Yeah,
congrats
in
to you,
like
bro. Congrats to you.
9
And
months.
so you're 5K into, let's say, almost or maybe $1 million. The risk reward there is insane.
Yeah.
But what would you say is your scale up process in the last almost 1 year from, you reinvest your challenge fees to buy more challenges and go for more firms? What is your approach in terms of you started off with 2 firms? Then did you jump directly to 10 or did you slowly scale up?
No, I slowly scaled up, just building one account at a time until I was like 1.5 million, 2 million, which at that point I thought was crazy, right? But then I realized like, why not go for more? So that's when I started going very aggressively and scaled up very fast, like 5 million. And then I kind of stayed there, got banned by a prop firm, went down a little bit. It's just like trading any life. You go up, you go down. That was me in terms of capital. So after every high, there was a low and then a new high.
Yeah.
Yeah.
I mean, at the end of the day, the mental blow of losing even $1 million in funding is probably reassuring to know, number one, it's not your money. And number two, you can get it back. And that's a recent incident you had where I remember watching one of your unfiltered videos where you were going through a rough patch because you lost a significant amount. And then we were speaking the other day and you're like, oh, I got it back in 2-3 weeks.
Yeah.
So what was that bounce back like?
Well, I know when it comes to prop firms, obviously you want to, you can either go the conservative way. Usually what I did and what I do now is, let's say I get back to 6 million. I trade conservatively for like 1 to 3 months.
Okay.
So do like 1%, 2%. And then when I have all the money coming in, then I can go a little bit more aggressive. So that's what I did in the last few months. And that's what I did there, which didn't play my way, obviously. But just, you have that reset button, right? Which can be a good thing and also a bad thing. But yeah, just after 2-3 months, I think that's my average of maybe holding some funded accounts. And then maybe I lose them. But I have all those payouts coming in, right?
Exactly.
So even if I was to lose all my capital, I can just rebuy everything and it's not going to be affecting me that much. I don't look at the investment anymore because it's...
Well, the way to look at it is you've got your 1 to 10 average ratio from challenge fees to withdrawal. So even if you go through a rough patch, that 1 to 10 might be 1 to 9. It's not going to be
exactly. But the thing that I need to be careful about is prop firms actually, starting to ban me.
Okay.
Because when you start to go through a lot of accounts, they're probably gonna...
So do they ban you because you failed too many challenges and that's the excuse
they
use?
never say the excuse. Like the recent one, which was one big company that banned me, was just because my results were not replicable. But I was trading with them for like a year.
It's an excuse, yeah.
Yeah, and I had 6 figures in payout. So
that's what I wanted to ask. So do you start to notice like at a certain payout amount with one firm, they start to get a little bit... give you issues and then maybe even delist you?
No, all the prop firms I'm trading with currently, I've never had issues. But the newer ones, like let's say when I wanted to scale up, I went for like, newer companies. After like, 10K, they will just send me an email.
10. Okay. Okay, fair enough. They don't have the liquidity to absorb it. Fair enough. When it comes to the prop firm space, obviously people go with, let me get a 100K account. And that's because maybe it's within their budget or something. And it's a very nice goal, 6-figure account and all of this. And that's kind of like the normal milestone I see around. But then there's a few people like yourself who have really blown that out of the water and said, no, you can go for millions and millions. And the beauty, I don't know who said it first. Maybe it was Kyle or I saw it somewhere. It's like trading is not a game of percentage return. It's a game of capital. And when we spoke on the roundtable on Riz's channel the other day, it really showed that all you really need to do is forget trying to get 100%, 200% return. How about 1% return and having a lot of capital? It will probably pay you more. Is that something was a goal of yours or is that something that happened? And talk to me about how that affected your trading, knowing you only need a few percent to make good money.
Yeah, that was a big change in my trading career once I figured that out because like everyone, when they see prop firms for the first time, they're like, oh, I'm going to get a 100K account and I'm going to make 10% a month and that's 8,000 in my pocket, right? But after a few months or maybe a few failed challenges, you realize that's not really obtainable, right? Because you actually need to make 80% of your account, not 8%. So that thing changed when I wanted to scale up because I was like, all right, I have $2 million in capital. What's the lowest percentage return that I can make without, really going at it? It's like 1%, 2%. So if I want to make 100K a month, then I'm going to need like 5 million or 6 million to trade and make 1 to 2%. So let's just go for that. Don't really look at the investment because that's just it's just an investment, right? But people don't look at it that way. You just throw some money up front, you pass some accounts, and then once you have a very good strategy and trading system that brings you 1 to 2% a month, just use that on your fund accounts and keep stacking payouts.
I see a lot of new traders, their mindset is, let me start off with a 5K account, just so I don't have too much risk. Once I've passed that, got my first withdrawal, then I'll pay for the 10K and then 25, 50, maybe then 100, and then scale slowly like this. Whereas you kind of took the approach of, let me put a bit of investment in and go for many accounts and then many to even more and more and more, as opposed to one account and slowly grow it. What is your reasoning to take that approach?
I'm a very competitive person, so I wanted to dominate the space, to be honest. So that's why I wanted to be the biggest. I was like, let's push the limits. Why not? I don't know. I think Kyle was maybe one of the top. I think he had like
I think
4
Kyle has
million
done similar to you. I don't know in terms of capital, but in payouts. And then
he did more in payouts, I'm sure.
Yeah. And then Pasquale also we've had on the show. I think he's number one.
Yeah, but that's a different type of trading, right? He's just
What
more
do you mean
aggressive.
by that?
He was more aggressive in funded accounts, right? Because he made like 2.5 million.
He made 2.5 and his ratio was like yours, 1 to 9, 1 to 8 in terms of fees to withdrawals. He was a very fundamental basis and that was his approach. Kyle, obviously, as we know, is a very ICT technical basis. Where do you lie on that spectrum?
I'm just a trader. I don't like to have a label on myself. I just found a way to be profitable and I just trade. I don't like all those terms. Smart money, ICT, whatever. Does it really matter? Because you see and we've talked about like all the ICT guys, it's like less than 1% are profitable, right? But they have all these insane markings, definitions. It's just a waste of time and energy. My charts are very clean. I don't really even mark them anymore. Just look at price and wait for the right timing and then just execute a trade.
When it comes to ICT, I feel like a lot of people when they're studying and when they're learning, they want to learn like they learned in school. So they're like, let me learn the definitions. Let me learn from what studying feels like. So when you see all these terminologies, you're like, oh, that looks like good content. So to be productive, let me study that content. And that could be a loop of, you don't necessarily need it, but you feel productive in doing it. And the conclusion we had the other day was, with Kimmel on the show, was ICT is so broad as a concept. There's so many things to learn. And based on the few traders we know that have made it work, for example, Kyle, they pieced it together in a specific way, and other people piece it together in a horrible way. So it's not necessarily the concepts, it's the trader at the end. And I like what you said of, I don't need a label, I'm just a trader, because you found your way. Me too, I don't have a name of my strategy. I use pieces of, let's say, strategies, but in the end, the way I mixed it is my way.
And you've seen how we trade very similar.
And we actually are, once we've discussed, it's like actually very similar. And it leads to my question, which is, I believe it's important for us to really have clarity in a strategy. And I think every trader that makes any profit, they have to know what their strategy is and it's predefined plan. Would you be able to summarize your strategy in a few sentences of how you look at the market?
So I focus a lot on higher time frame, obviously, liquidity, and then timing. So that's all I use, right? I wait.
I think our conversation is going to be a mirror.
Exactly. Once I know the higher time frame play, where price wants to head, where liquidity is, where the objective is in the markets, because the market moves in objectives, right? You have like Euro USD happened. You've seen the last week with the FOMC for whoever is watching, like went up to the objective, now came down to the next objective, right? So once you figure out the higher time frame plays, then it's just the matter of timing. When is it going to move? Most people, what they do is they wake up, London session, they take 2-3 trades, right? They lose them. And then maybe they're in drawdown, maybe they have a funding account, they're close to daily drawdown. And then when the actual move happens, they're out of trades, right? So I was there before. That's why I'm saying I know the feeling. And once I kind of removed that and focused on, okay, when is price actually going to move? We have news this week, Wednesday, FOMC. Yeah, that's probably when price is going to move, right? Maybe Thursday or Friday. So I just remove 2 days from my trading week.
Okay.
And then I remove a lot of hours from my trading plan, right? No London session. If I have news, New York is going to probably move market. So I'm just going to wait there and execute my trades then. It's just that simple, right?
One of my favorite sayings that I always repeat to myself, I always do this whenever I'm doing anything, I have little sentences in my head that I repeat to myself. And in trading, I have a few, one of them being a restricted trader is a profitable trader. I know that I have restrictions and the restrictions I've chosen are there to serve me. They're not there they're not to give me problems. They're there to enhance my trading. So what are the restrictions you use in your trading? You've mentioned time, you've got hours of the day. What kind of restrictions have you put in your trading system that are there to serve you? And what are those non-negotiable ones that you'll never leave? You'll always use these restrictions.
I always trade in that time window. So first 2 hours of New York Open, through New York Open. If I was to trade London, then I have a specific trading system just for London where I trade the first 1 hour, 2 hour of London Open. So, when prices move, taking liquidity, moving maybe an Asia high inducement, and usually London session, I would just go for a 1-to-1. Or just try to get, when I see a move happen, like 2-3 candles, I'm out. Because I know London likes to,
It's a quick impulse to Asia high to low, yes.
Yeah, exactly.
So it sounds like you don't prefer London session, you prefer New York.
Yeah. Lately, no, I don't really trade.
I'm the opposite, actually. I don't like New York session. I prefer London.
Just because I want to focus more on higher time frame plays. And London for me is just a quick move. It's just something to start the day off. It's not the move for the day. So if I was to trade London, I would just go in and out, try to get whatever I can and have the higher win rate.
What is your average, let's say the TP that you take, whatever the risk reward is, but the TP that you take, usually how many points is that or pips is that on
like
EU?
10, 15 max.
Okay, it's not a huge push. You're actually going for the session volatility.
The session range, yeah.
Okay, so you're in and out within the same day, probably the same hours, few hours.
Yeah.
Okay. Do you find, because you mentioned Asia range, and it sounds like you're entering the markets on key liquidity moments, opens of sessions where volatility of that session kicks in, which I'm in a line with, my hours are the same. When it comes to framing, and when I choose London or New York, the point of interest is there, and whether it arrives in London or New York is obviously out of our control. So I obviously prefer it to be in a point of interest. But what I prefer about London session is because I have the reference of Asia range liquidity. I kind of get an idea of, okay, this was the first liquidity grab. If it aligns with anything, I know the next liquidity zone, as you said, objective to objective. But when I get to New York, I find Asia high and low is probably already taken. So I've lost that reference. So now I have to go with higher time frame or the move of the day as opposed to the London session.
Exactly.
And I also noticed that if I enter on a New York open, let's say, or the second hour of New York, I slightly prefer. Let's say I enter there. By the time in 2 hours, the volatility of the day slows down. London closes, New York starts to taper off. And if my objective is, let's say, 30 pips, I usually goes into the next day, my final TP. Whereas in London, it's very rarely I hold a trade over the night. Those are the reasons I don't like New York as much as London. What are the reasons you don't like London with this in mind and maybe prefer New York? If the higher time frame is
because
not
London,
factor.
when it gives a move, it usually retraces right after, so you can catch the continuation in New York. And one of the best setups in London, I think it's like you have the Frankfurt high next to the Asia high. London just wicks it, gives a nice lower time frame confirmation. That was what I used to trade, like 1 minute confirmation, the way you trade. That was a very good setup, very clean also, because it gives you at least a 1-to-1 or a 1-to-2 to go break even if you have a smaller stop loss. But I just prefer New York session now. Just want to enter higher time frame, wait for Wednesday or Thursday, Friday, have the higher time frame move, just enter, have a bigger stop loss, don't have to watch the markets, be very active. Because I'm usually an emotional person. I'm also quite young, so I'm turning 25. And I have to remove that emotion from trading.
How many years have you been in the market?
It's funny because first contact with trading was when I was like 17. I don't know if you heard about binary options.
Yeah, not too much exposure,
like
but
IQ
yes.
options. Yeah, that's what I was doing when I was like 17. I was
that
trading
one
the
feels
1 minute
more
candles.
like gambling, right?
Yeah, you have to bet where price is closing and then manipulate the price and everything. But that was my first contact, which was interesting and caught my attention. And
so you've had a lot of years in the game, actually. Yeah. So when it comes to the entries, which we spoke about on Riz's channel, we discussed how you used to use lower time frame confirmations, similar to as I do now, but then you gave your breathing room. So you're like, I might enter on a 1 minute confirmation, but you'll put your stop loss above point of interest, giving yourself 15 pips, I guess. On average.
My usual stop on EU is like 15. Lately has been a bit higher, like 20, 25, just because I don't want to. I'd rather stay in drawdown than take losses. That's the thing, right? So I'd rather stay in drawdown and let price do its thing than take a loss, have to re-enter, and all of that.
Is that more for psychology, or you found it's just more profitable for you to take that route?
Both. Psychology is way better, not taking losses.
I can imagine,
Yeah, if you're taking wins, then just it's a good way to continue taking wins. And profit-wise, because you lose, you don't have that many commissions, right? Just have one trade and then that's it.
And your average, because your goal at the end of the month is just 1 or 2%.
Yeah.
What is your average risk reward then? It doesn't need to be high.
No, it's my usual trading is like 1-to-1. I go break even. It depends on the setup.
Okay.
So if I see like 1-to-1 is the best I can take, I will just usually close. But I have the higher time frame move, then I will go for 1-to-2 or even the higher time frame objective, right? So it depends on the setup. But usually I try to, let's say I take a trade from Monday to Wednesday, I just close at 1-to-1. And then Wednesday to Friday, when I see the higher time frame playing out, then I can hold to final take profit, or just 1-to-2, somewhere around there. My usual, because I use TradeZilla, for the last 6-7 months, my risk reward was like 1.9, win rate like 60%.
1 to 0.9.
No, 1 to 1.9.
Oh, okay, got it. 1 to 1.9. Okay, so then your win rate only needs to be, it doesn't need to be a high win rate at all.
No. It's like 55-60%.
And that's usually where you land?
Yeah.
Okay, very good. And now you've kind of modified your system for prop firms by increasing your stop loss size for the sake of psychology and commissions and so forth. Your risk reward, you've reduced it because your goal is only to make a few percent a month. What other modifications have you made specifically for prop firms? So I'm not that guy that is going to sell out and throw promotions at you, throw this link, that link. You've never seen it from me. But TradeZeller is a little bit different. This is a journaling software that I've been using myself for about a year now. And you've seen it on my YouTube videos many times, going back months and months. And because I'm friends with the founder, Umar, he's actually given me an exclusive offer to pass on a discount to you guys because I told him that it's a valuable gift I want to give to my audience. As a trader, it's very simple. You have to find an edge and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data. And TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your back testing tool, strategy testing tool, playbooks, notes, and it's going to be a full journal. It makes your journaling easier, faster, and more meaningful. Whereas if you were just documenting on an Excel spreadsheet or taking screenshots on your iPhone, you wouldn't be able to pull out the data that you need. The correlations that the AI within TradeZeller is pulling out for you. There's so much variety and utility within the software that I think it's essential for any trader. So the link somewhere below is going to take you directly to the TradeZeller website. I'm not getting paid. This is for you. If you want it, if you like it, go ahead and explore it. And probably you'll be using it for years to come.
Well, position size. So even, let's say my 1% risk should be, I don't know. I try to keep it under 10 lots per position or maybe less. So if I have to put like 25 lots, I'd rather split it just because you lose that small slippage they have. I don't know
on a certain lot size.
Yeah, if you trade like 20 lots, 25 lots, you get like 1 pip slippage on EU, which is a lot.
Interesting,
right?
interesting.
Yeah. So I kind of saw what they're doing and tried
to... Is that across every firm or was a few firms doing it?
It's a few firms doing it. And then like also the stop loss. So usually I don't have the stop loss placed. I just have it on my chart and I watch the actual trade and prefer to close it manually.
Do you think they target your stops if you put it?
No, not really targeted. I've had instances where like price wicks my stop loss, but that wick is not actually there, which is obviously manipulation. And also slippage, like I've noticed they increase spread when price is closing on your stop loss. I've seen that multiple times. So that's just another thing that I added just not to be played out of my prop firms. There's a lot of dirty tricks.
So you lower you reduce your lot size so that you don't invite these dirty tricks. What happens when you are approaching a stop loss and you have it visually there, but you haven't put it there? How do you then execute? Do you just put it when it's approaching or?
No, I just close manually usually.
Manual exit.
And I also close one trade at a time. So if I have multiple positions, that's the thing. So let's say you have 25 lots on your trade. If you have it split in like 5 positions, you close one by one. You give like a 1 second between. If you do the the MetaTrader 5 like close all, you're gonna get slipped by a lot.
Oh no way. Okay. And why do you split up your position? Different entries or same entry?
No, same entry. It's just don't have that slippage. So I take the first position. I wait like 1 second, enter the next one. Because if you do it fast, they're gonna add slippage.
It's interesting to know these things.
Not a lot of people know it because they don't look at the details, but those small details, they do make a difference.
They make a huge difference. When it comes to your profit taking, is it the same thing? It's the same thing. You split it up and
I don't put targets, and some platforms use that against me. They're like, oh, you don't have a stop loss, so your risk, or maybe I put my stop loss way below, in case it's like a flash crash or something, and they say, oh, you risk 5%. But my risk is like 1%.
Got it. Yeah.
That's what a platform actually used to ban
against you
and not pay me out. Yeah.
Okay. When it comes to this stop loss situation, you have your entries, multiple entries per account, and then you have almost 20 prop firms you trade with, and each one has 1 or 2 accounts, I guess. Meaning to say you have a bunch of accounts and a bunch of entries. How are you logistically managing maybe in one day 30 positions?
Just trade copier.
Okay.
And use a master account, which is my personal account, like IC Markets. So that's also because you have difference in entry points, which can be kind of hard to track. That's why I don't really use a stop loss placement. Just watch it manually.
Is that why you also have a larger stop loss to factor in different price fees, different spread, different?
Yeah, you just lose a lot of frustration, right? Because I've had it where I enter a trade, maybe have a big lot size, a small stop loss, and on one account it's like a 1% loss, another account's like 1.5%, another one 1.3%. So you just remove a lot of stress from all of this. It's way better.
And trade copiers, do you have one you use specifically?